Hello and welcome to the day ahead. It is June the 28th, Tuesday. I'm Andrew Gagan. Thanks for joining us. Let's take a look at how global markets finished up. Wall Street closed lower, dragged down by weakness in mega cap growth stocks as investor sentiment retreats and markets price in more aggressive rate hikes from the Fed. Meanwhile, rising oil prices help boost energy stocks. All three of the major indices are on track to record two straight quarterly declines. That's the first time that's occurred since 2015. The tech-heavy Nasdaq is looking to finish June in the red for a third consecutive month, and the S&P is likely to post its fifth worst year-to-date decline since 1962. Stocks specifically, Amazon, Microsoft and Google were the worst performers of the session, as analysts say investors are looking for what's ahead in the second quarter reporting season. And shares of retail trading platform Robinhood Markets rose after Goldman Sachs changed its rating to neutral from sell, and Coinbase Global shares slid after Goldman Sachs downgraded, rating the cryptocurrency exchange as sell, down from buy. It comes as the crypto market continues to be weighed down by ongoing volatility. Elsewhere, Nike first quarter earnings were a beat as strong demand in Europe helped outweigh losses in China. Shares were up around 1% after the bell, as company sales in Africa, the Middle East and Europe rose 9% to $3.25 billion US. It comes as Nike said plans to exit Russia are costing the company around $150 million. Well, the G7 has vowed to stand with Ukraine for as long as it takes, promising to further squeeze Russia's finances with new sanctions that include capping the price of Russian oil. This comes as the Biden administration and Moody's credit agency say Russia has defaulted on its foreign sovereign debt for the first time in a century, an assertion the Kremlin has rejected. On the data docket, new orders for US-made capital goods increased solidly in May despite deteriorating business and consumer sentiment, as well as heightened fears of a recession. Orders for durable goods rising a more than expected 0.7%. The Dallas Federal Reserve Manufacturing Activity Survey plummeted to its lowest level since May 2020, and pending home sales index rising 0.7% in May, although it's down more than 13% on an annual basis. And US Treasury yields rose, the 2-year to 3.13%, the 10-year lifted to 3.2%. This as the US dollar index weakened, with the Aussie dollar rising to 69.2 US cents. Well, negative global sentiment is likely to weigh on the local share market today after yesterday's rally. ASX futures relatively flat. And global oil prices have pushed higher. Brent crude up 1.7% to $115 US a barrel as traders mull a cap on Russian oil prices. Meanwhile, OPEC member Libya has warned it may have to halt exports amid political unrest. OPEC members will meet on Thursday to discuss production quotas. The iron ore futures price rising close to 1% to $129 US a tonne. Base metal prices were mostly higher, with tin reversing losses up more than 9%. Gold is slightly weaker, trading near $1,823 an ounce. And crypto has paired some of its recent gains, Bitcoin managing to hold above $20,000 US. And today we'll get the census data that's released for Australia, with the quarterly population data also coming to us, as well as weekly consumer confidence. And that is your day ahead. We'll see you again tomorrow.